Hi all, Benny from East West. Just going to take a look at the S&P, see where we're at, see how things have developed and where we sit. So just for this week, I thought I'd start out with something a little bit different. So I sort of pointed this out on Twitter the other week because I thought it was kind of interesting to hear that the Mooch has said, you can see here the S&P closed above the 200-day moving average for 18th straight session, and no prior S&P 500 bear market in history has made a new low after making 18 consecutive closes above the 200-day moving average. So is that right? Well, I thought I'd double check it. And to do that, I thought I would just use the new Chat GPT AI program that's floating around. I've been playing around with this. It's pretty interesting stuff. I'd advise you to go and have a look at it if you have the time. I think you'll find it's pretty interesting. Anyway, I've just gently started probing the program and asking the AI about the bear markets. And as we've stepped through, I've basically just asked it to write bunches of code that would work to prove or disprove the Mooch's theory. So I just took what it gave me at the end here, and I just whacked it into Python and just ran it to see what would come out. And this is what it gave me back. All the bear markets since 1957. I consider the S&P to start from about 1957. That's when there were actually 500 companies in the index. So that's a bit debatable, but nonetheless, all the bear markets that we've had, and have we made a new low after we've closed 18 days in a row above the 200-day moving average? And the answer is no. We haven't. So what the Mooch has said, as far as I can ascertain from using Chat GPT, the AI, and just going through running the code, that looks correct. Anyway, I thought it was just an interesting example of I think there's a million ways you can use this AI, and like I said, in terms of especially writing code, it's a bit of a godsend if you're into that sort of thing. Nonetheless, I'd still advise you to take a look at it. It's really, really interesting. So just coming back here to the chart, well, what does that mean? So the first thing I would suggest is, if you're just sort of looking at that and looking what the Mooch said, well then what that means is there's no way in history we won't be taking out this low, because every time in the whole history of the S&P 500, after we've had a bear market, after it's been above the 200-day moving average, and I've just brought that in green here, and that the red's the 50, so we do have the golden cross. But you can see here that we've had this extended period, and this was way back when. I think even now it'll be longer above there, that we've closed above there. So I think this is the first day we closed above here, and now we're on day 25 of being above the 200-day moving average. So with that being said, why wouldn't you charge in and go long? Because history suggests that the bottom's in. Well, this could be open to a bit of conjecture, but I'll just let you be the judge. So right now, this is the bull market line. So when we close above this level, and we haven't actually closed above it yet, even though we've tapped above it, we don't have a close above this level, which represents 20% off the lows at 41.90. But once we get a close above here, then to me, I think that means that the bear market's over. So think about this. If the bear market then becomes over, can we not then still make a low? Because effectively now we're in a bear market. We're in a bull market. We're not in a bear market anymore. Once we're 20% off the lows, is this not then officially a bull market? So you see what I'm saying? I mean, technically, maybe the bear market finishes, but we can still make new lows. So let's consider a situation where we come up like this, and we do close above this line, and we do come up here, and we are technically in a bull market. Can we then fall? Because what happens if price then does this? What if we then turn around and fall, and we come below this low? It still doesn't really upset that stat. Well, I mean, I don't think it does, because this is not. This is still technically in a bull market. So I think this sort of scenario could still play out, because we could come down here and just break this low, but if we don't fall 20% from wherever this peak's going to be, then we're not in a bear market. So what I'm saying is we could do this, and then, this would still be considered, I think. Correct me if I'm wrong, but I think technically, just as a rule of thumb, this would still be considered, all of this would still be considered to be a bull. Sorry, not that much, but I would think that all of this would still be considered a bull market. So I think the point I'm trying to make is just because that stat's there, and the thing about it at the moment is there's a lot of people throwing out a lot of stats saying every time in history that something's happened, this is what's happened. So, you've just got to be a bit careful and just double check things and think, okay, well, is there a scenario where, we can still make a low, or the low might still give way, but that doesn't invalidate this bit of history where things have never happened a certain way before. So this might be one way that could happen. Anyway, I thought that was kind of interesting, so I thought I'd just point that out. But now let's just sort of get into the counts and what I'm expecting from here. So this is where I sit. I haven't changed my view on the big picture. I still think that this is 3 waves going in, and we're going to get one more 5 wave to come down to just take out that low, and then we start the multi-year rally. Okay, so that remains my base case. So this remains my primary count, and just to be absolutely clear and transparent, I have struggled to put a coherent count together through it. It's been difficult, so I've definitely lent on other people's counts. Let's fix this up a bit. Sorry, I just needed to change some degrees there. I've definitely lent on other people's counts, and this count I looked at Sam from Trade Devil's counts, which I thought were pretty good, but I was also looking at a count from an account by the name of Chandler Trades, which I think is very good Elliott wave technical analysis, or Elliott wave analysis of the S&P, and I kind of agree, because I do think that these just look like series of 3s rather than 5s going in, and it just looks like 3s everywhere rather than nice clean 5s. I mean, this kind of just looks more like a 3. This is definitely a 3. We'll look at the bullish count in a minute, but I'm struggling to put it. I think the case for it's going as an impulse, a 5 wave, is a lot more force, and I think that this flows a little bit better. So what I'm kind of expecting of here, I don't know how far down this is going to come, but I think pretty soon we're going to come up and just get the end of this up here like this, okay, and that's going to make the bigger B wave in the whole thing. So this is the middle corrective wave of the entire movement before we get one more sharp drop, and then we're going to have the multi-year rally. So that, I'm thinking just in here now, that we're going to be close to making a base. I'm not going to sort of make a prediction of where, but I'm looking for a bottoming action somewhere here before we just go and get this last little run up here to finish everything. And I think I heard someone else say it. I mean, if the S&P gets to 4,300, there'll be nothing but bullish sentiment everywhere. Like, it'll be extremely difficult to go short, because the bulls will be claiming victory, as they have done at every single one of these peaks. They've claimed victory. It's all over. We're going up, etc., etc. I don't disagree that we're going up. It's just all about the time frame in which we do it. I just think we've got a bit more time to go under the bridge yet. I should say there's a bit more water under the bridge, I should say. There's a bit more time to go through the hourglass. So this is the bull case, which, I just track it. I'm not really leaning into it. I just have a look at the counts of other people who are good Elliott wave practitioners, and they're bullish. I don't agree with the bullishness, but I've just sort of tracked their counts to see if they're onto something. Now, I did point this out before. There are a lot of cases here for the bullish notion. I mean, we do have a golden cross. We came down here and tapped the 50% mark, and we broke through this big trend line. So, these things that I've mentioned before, that they definitely weigh in favour of the bullish count. But these guys who have got more this sort of bullish outlook, they they've sort of structured their accounts a bit more like this, and I'm not sure it flows really good. I mean, even calling, I suppose 1, 2, 3, 4, 5, yeah. Yes, I suppose you could mark that out as an impulse. That's not too bad, but then this is a bit funky, a 4 wave up to a 5. Yeah, maybe you could call that an impulse. This is definitely a correction, but then even from here, this section through here is a problem for me. Just the way it looks, it just doesn't have the right look. And 1, 2, 3, 1, 2, and then to call this a wave 3, like that doesn't look like a wave 3. Even that looks like 3 waves to me more than trying to jam 5 waves into it. That's just the way it looks to me. It doesn't have an impulsive look. Okay, this whole movement here just doesn't have a good impulsive look to me, even though this has a good corrective look. So look, they may be right. I might be eating humble pie. I've certainly done it plenty of times before. But even with a wave 2, it'd be a very shallow wave 2. So I'm not big on this. It's not setting up the right smoke signals to me that this is what's going to happen and that we're in and we're on the way. I don't see it. Sorry. I'll keep tracking this in case I'm wrong, and I'll keep updating it, but it's just not my preferred count. So even just considering this, what I think we're going to get in here, sorry, I just need to clean this up a bit. Pardon me. What I think we're going to get here is most likely, pardon me, jumping around between counts too much, most likely a zigzag coming down. So we'll just look at it from a cyclical point of view here. And just on the big view, just what I'm thinking is that we've got the yearly cycle low in here. And we know on the big credit cycle, if you follow Malcolm at Norvast, you'll know the big credit cycle, half cycle low is due. So what I'm thinking is happening is we've had a cycle down here to make one intermediate cycle. This is another intermediate cycle. And I think we're just going to get one last intermediate cycle to make the half cycle low in the credit cycle, the 18-year credit cycle, before we take off again. Okay, that's kind of the view. So I'm thinking that we're just going to come down, maybe a couple more daily cycles to bring it down, but that's the overall long view. And then I'd be looking at the RSI here too, of course, just seeing if it makes a yearly cycle low but holds 40. Then this is on a weekly, of course. Then we would be anticipating that the next couple of years is going to produce a broad-based rally. But just as we sit right now, we can see here Feb 23rd is going to be, so that's this week, that would mark the average cycle length. So, we've already had, I think this is firmed up now as a daily cycle high here on day 42, because you can see now we've sort of failed through the trend, and we're below the 10-day moving average. So this is now seeking out a daily cycle low, I'd suggest. So what I'm kind of expecting is going to happen now is this, that we're going to get this low wherever it might be, and then we're going to get one more cycle that's going to push high, and that's going to make the ICH, the intermediate cycle, high. And then we're going to start, whether or not it's this cycle or maybe the next cycle, we're going to start to get failures. So we're going to start seeing these lows get broken. Now, I don't know how many, we might only get one. It might be a big sharp one like that. We might get 2 or 3 that will take us down generally. But that's just basically what I'm kind of expecting to happen from here as we seek out that intermediate cycle low to finish off this intermediate cycle. So I think we're close to a cycle high, an intermediate cycle high. I just think we've got one more, and that sort of fits with that idea of Elliott wave, where I'm expecting, that we're going to get that sort of 1, 2, 3, and then we're going to come down 1, 2, 3, 4, 5 like that before we make a big low and really take off. Okay, and maybe we only break this October 13 low marginally, or just equal it, or maybe we get even a little truncation. But I just think that there is more downside that's going to leak out of this market. So that's the view I've got at the moment. I I'm currently short the market. I have been for a few days now, since last week, just looking for this intermediate, so this daily cycle low, this daily cycle to complete, which I think is probably coming relatively soon. I don't know how deep it's going to go, but I'm just from mid this week, I'm going to very much be on the lookout. And if something triggers the market to start rallying again, I'll be getting out quick smart, and then I'll be watching probably this declining trend line. So I'd be watching for the market to sort of come down and then break this trend line and the 10-day moving average, in which case I'd probably be going long for the run to the top, and then looking for signs of that cycle high. So that's where I sit. I'll update things as they come to hand, but thanks for watching.